Hey everyone, and welcome to This Explainer. I'm Brian, your CPA for the day, and we're going to be diving into a strategy that honestly feels like some closely guarded billionaire secret. But you know what? It's really just pure structural math. Our goal today is to unpack a mechanism that is baked right into the tax code. It's a strategy that lets you legally shelter a massive chunk of your investment returns. We're going to look at exactly how you can keep your hard-earned money right where it belongs, in your pocket, working for you, instead of handing over a huge cut to the IRS every single time you make a smart move in the market. Okay, let's dive into this. Because it all starts with a question that is absolutely going to shift how you view investing and honestly, how you view your own earnings. We are so conditioned to believe that whenever we make money, the government just automatically takes their cut, right? But did you know there is a specific, completely legal income threshold where the IRS literally lets you walk away with tens of thousands of dollars in stock or crypto profits and they charge you exactly zero federal tax? Yes, zero. For everyday workers who are used to seeing a third of their paycheck just vanish before it even hits their bank account, this can sound completely unbelievable. But listen, we aren't talking about loopholes hidden in offshore accounts or some convoluted corporate trust. We're talking about walking right through the front door of the US tax code and walking away with up to $50,000 completely tax-free. Our source material sums this reality up perfectly. Quote, "It sounds like a billionaire's secret hack, but this 0% capital gains game is actually built for everyday investors like us." End quote. That sets the baseline for everything we are going to cover. As your CPA for the day, I really want to emphasize that we aren't engaging in economic theater or sketchy high-risk setups today. The wealthiest investors don't just rely on secret islands, they heavily utilize the standard, published rules of the tax code that most people simply never take the time to learn. This is all about crystal clear structural math that is available to absolutely anyone willing to understand how different types of income are categorized. Section 1. The Billionaire's Zero Secret. Now, what's really interesting about this is the stark contrast in how money is treated in this country, depending entirely on how it's generated. On one side, we have what our source calls the success tax. For most of us, this is just the default reality. Every dollar you earn at a day job is heavily taxed immediately. The harder you work, the more overtime you put in, or the bigger the raise you get, well, the higher your marginal tax rate climbs. You are effectively penalized for increasing your labor output. But smart investors are playing a completely different game on the other side of the equation. By prioritizing and harvesting investment gains instead of relying solely on W-2 wages, you can drastically reduce your federal tax burden. It's an entirely different set of rules, where money making money is treated far, far better than a human working for money. Section 2. The 366-Day Holding Rule. 366. Take a second to let that number sink in, because it is arguably the most important number in investing if you care at all about taxes. To play this 0% game, you absolutely must hold your assets for more than a year. Whether you're dealing with traditional index funds, individual stocks, or crypto, the clock starts ticking the exact moment your buy order executes. And let me tell you, the IRS is not known for its flexibility. You cannot sell it day 300. You cannot sell it at day 365. The IRS doesn't care if it was a leap year, if there was a market crash, or if you were just really eager to lock in a win. You absolutely have to wait until day 366 for the tax rules to fundamentally shift in your favor. Because once you hit day 366, something magical happens. Your profit is officially reclassified as a long-term gain. Why does this matter? Well, the tax code actively rewards you for providing stable, long-term capital to the market, rather than engaging in rapid-fire day trading. The government wants to incentivize investment, so they offer highly favorable tax treatment for assets held long-term, treatment that is vastly superior to the regular income tax brackets applied to your day job. This simple reclassification is the absolute key to the entire strategy. It is the exact dividing line that allows you to legitimately start to nickel and dime the system, optimize your tax footprint, and keep way more of what your investments earned. Section 3. The $47,000 tax-free math. So the crucial point is the exact threshold for a single filer, roughly $47,000. But to truly gain an advantage here, you need to deeply understand how this math works, because it trips up a lot of people. This threshold applies to your total taxable income. That means you add up your regular job income plus your investment profit and then subtract your standard deduction. If that final total number stays under this 0% threshold, roughly that $47,000 mark, your federal tax rate on those specific long-term gains drops to exactly zero. So imagine a scenario where you make, say, $30,000 a year at your regular job. Because of this rule, you have a massive window to sell off long-term stock holdings, pocket thousands of dollars in pure profit, and legally owe the federal government absolutely nothing on those gains. It's an incredible mechanism for accelerating wealth, especially if you have variable income or decide to take a year off. Let's move to and see how this builds step by step into a real harvesting blueprint so you know exactly how to execute it. Step 1. You buy an asset, you exercise extreme patience, and you wait the required 366 days to unlock long-term status. Step 2. You actively manage your total taxable income. This might mean timing your stock sales during a year when your regular business income is slightly lower, or increasing your 401k contributions at your day job to lower your overall taxable wage, keeping you safely under that roughly $47,000 ceiling. And step 3, you execute the sale. You harvest those long-term gains, let the threshold do its job, and pocket the profit completely tax-free. And this brilliantly illustrates that we are looking at the ultimate legal tax shelter. The crazy part, it's been sitting in plain sight the entire time. Your profits are 100% untouched by federal taxes for one simple reason. You had financial discipline. You didn't rely on a highly paid team of lawyers. You just followed the structural rules of the code, you respected the holding periods, you managed your income thresholds, and you won. It fundamentally transforms the way you approach building wealth because it proves that efficiency and timing are literally just as important as picking the right asset in the first place. Section 4. Build your financial fortress. Our source leaves us with this incredibly powerful mandate. Quote, stop being a victim of the hidden tax of ignorance and start using the code to your advantage, end quote. I love that, because ignorance is, quite literally, the most expensive tax you will ever pay. You have worked incredibly hard to generate your initial capital, and you took on the risk of investing it. Now, it is absolutely crucial to ensure you keep the resulting wealth in your own hands rather than automatically forfeiting a percentage to the IRS simply because you were unaware of the 366-day rule or the 0% income threshold. Deepening your understanding of these mechanics is the true foundation of building a lasting financial fortress. To quickly recap our core philosophy today, whenever possible, position yourself away from that heavy, immediate success tax tied to ordinary wage income. Base your financial moves on the cold, hard, verifiable math of the tax code, rather than listening to financial rumors or engaging in unnecessary theater. Master the exact rules, like forcing yourself to hold for 366 days to legally nickel and dime the system and optimize your footprint. And finally, when the timing is right and your income falls within the threshold, strike with precision and harvest those long-term gains at exactly 0%. Which brings us to our final thought for the day. How will you use the tax code to build your financial fortress? The tools, the rules, and the thresholds are all right in front of you, just waiting to be utilized. If you want to keep the math firmly in your favor and continue mastering the mechanics of wealth, make sure to hit that subscribe button for the Hidden Tax channel so you never stop learning. I'm rooting for you, everyday investors. Thank you so much for joining me for this explainer, and I wish you a very nice day.